For many retirees, the thought of purchasing a new home can be daunting. Traditional mortgages often require hefty down payments and strain monthly budgets, potentially jeopardizing the financial security carefully built over a lifetime. However, the HECM Purchase Program, Home Equity Conversion Mortgage Purchase, has emerged as a game changer, allowing retirees aged 62 and above to enter the housing market without the burden of traditional mortgage payments. In this video, we'll dive into the intricacies of the HECM Purchase Program in 2024, exploring its benefits, potential drawbacks, eligibility requirements, and crucial considerations for retirees seeking a fresh start in a new home. By understanding the program's nuances, retirees can make informed decisions that align with their long-term financial goals, housing needs, and legacy planning. Understanding the HECM Purchase Program, the HECM Purchase Program operates similarly to a traditional reverse mortgage, but with a key distinction. Instead of leveraging the equity in an existing home to access funds, retirees utilize that equity towards the down payment on a new primary residence. This allows you to transition seamlessly into a new home without depleting their retirement savings or facing the constraints of traditional mortgage payments. Here's a closer look at the program's mechanics. Eligibility. Applicants must be at least 62 years old. And while there is no minimum credit score required on the Home Equity Conversion Mortgage, HECM, a credit check will be ordered to calculate residual income and confirm whether you have any federal tax liens or delinquent debts that may affect loan eligibility. Applicants must also complete mandatory counseling with a HUD-approved agency is essential to ensure a thorough understanding of the program's implications. Down payment. Retirees typically contribute between 45% and 60% of the new home's purchase price as a down payment. Funds for the down payment can come from various sources, including the sale of their previous home, savings, or the expanded funding options introduced in 2024, discussed in detail later. The remaining balance of the purchase price is financed through a HECM loan. This loan allows retirees to move into their new home without the burden of monthly mortgage payments. The loan is secured by the new property, and repayment isn't due until the borrower moves out, sells the home, or passes away. Now let's take a look at the HECM Purchase Program in 2024. The HECM Purchase Program offers a multitude of advantages for retirement-minded individuals seeking a new chapter in their housing journey. Let's delve into some of the key benefits. Elimination of monthly mortgage payments. This is perhaps the most attractive feature of the program. Retirees are freed from the financial strain of traditional mortgage payments, allowing them to allocate their resources towards other expenses like healthcare, travel, or supporting loved ones. This financial flexibility fosters a more secure and comfortable retirement lifestyle. Increased flexibility and freedom. The HECM Purchase Program empowers retirees to downsize to a more manageable home, relocate to a preferred climate or be closer to family, or simply find a property better suited to their changing needs and preferences. This flexibility is particularly valuable for those seeking to age in place comfortably without the constraints of a large or outdated property. Retention of ownership and control. Unlike some retirement housing options, the HECM Purchase Program allows you to retain full ownership of their new home. You'll have the freedom to make modifications, decorate as you wish, and enjoy the peace of mind that comes with owning your own living space. Security and peace of mind. The HECM loan doesn't need to be repaid until a specific event triggers it, such as you moving out permanently, selling the property, or passing away. This feature provides a sense of security and control over your living situation, allowing you to age in place comfortably without the pressure of looming monthly payments. Now, here are some drawbacks and considerations for the HECM Purchase Program. While the HECM Purchase Program offers significant advantages, it's crucial to be aware of potential drawbacks and considerations before making a decision. Here are some key points to ponder. Ongoing expenses. Remain. While the program eliminates traditional mortgage payments, property taxes, homeowners insurance, and maintenance costs are still your responsibility. These ongoing expenses can accumulate over time and potentially strain the retiree's budget if not carefully factored in. Decreased equity over time. As with any loan, interest accrues on the HECM loan over time. This can reduce the amount of equity that can be passed on to heirs or beneficiaries. It's essential for retirees to have open and honest conversations with family members about the program's impact on their legacy planning. Consider utilizing tools like financial planning software or consulting with an estate planning attorney to model the potential impact of the HECM loan on inheritance. Upfront costs. Obtaining a HECM purchase loan involves upfront costs, including origination fees and mortgage insurance premiums, MIP. These fees can vary depending on the lender, loan amount, and borrower's creditworthiness. Shopping around for the most competitive rates and terms can help minimize these upfront costs. Eligibility requirements. Not everyone qualifies for the HECM Purchase Program. Eligibility hinges on age, minimum 62, and certain financial requirements. Additionally, the program may not be available in all areas or for all property types. Consulting with a qualified HECM lender can help determine eligibility and program availability in your specific location. Counseling is mandatory. HUD requires mandatory counseling with a HUD-approved agency before finalizing a HECM purchase loan. This counseling covers the program's details, implications, and potential risks, ensuring informed decision-making by the borrower. HECM limits and loan amounts. The Federal Housing Administration, FHA, sets loan limits for HECM loans, which vary depending on the borrower's location and the appraised value of the new home. Understanding these limits before embarking on the home search process is crucial. The evolving landscape of the HECM Purchase Program in 2024. The HECM Purchase Program continues to evolve, offering greater flexibility and potential benefits for retirees in 2024. Here are some key updates that can significantly impact your decision. Expanded funding options. Previously, the down payment for a HECM purchase loan primarily came from the sale of the borrower's existing home or savings. In 2024, additional funding sources are now permissible. Premium pricing. Borrowers can opt for a higher upfront interest rate in exchange for a lower ongoing interest rate, potentially reducing the amount of cash needed for the down payment. Gifts. Contributions from family members towards the down payment are now allowed. Disaster relief. Grants. Grants received for disaster-related repairs or reconstruction can be used for the down payment. Employer assistance programs. Some employers offer financial assistance programs to help employees with housing costs. These funds may be eligible for contributing to the down payment on a new home purchased with a HECM loan. Increased seller concessions. In 2024, sellers can now contribute up to 6% of the purchase price towards closing costs, origination fees, and other expenses associated with the HECM loan. This can significantly reduce upfront costs for retirees, making the program even more attractive. Making an informed decision. Essential steps for retirees. Considering the HECM Purchase Program requires careful evaluation and planning. Here are some crucial steps to take before making a decision. Gather information. Research the program thoroughly, understanding its benefits, drawbacks, and eligibility requirements. Utilize resources like the HUD website. Speak with qualified HECM lenders and attend informational workshops. Consider your needs and goals. Evaluate your current and future housing needs. Do you plan to downsize, relocate, or age in place? How important is financial flexibility in your retirement? Aligning your housing aspirations with the program's benefits is essential for a successful outcome. Seek professional guidance. Consult with a financial advisor specializing in retirement planning. They can assess your financial situation, analyze the program's impact on your long-term financial security, and offer guidance on navigating the HECM loan process. Shop around for lenders. Don't settle for the first lender you encounter. Compare rates, fees, and terms from multiple HECM lenders to secure the most favorable loan options. Complete mandatory counseling. Take advantage of the HUD-approved counseling program. So there you have it. You really can have a new home with no mortgage payment. Before you go, don't forget to subscribe for more insights for a happy and successful retirement. Share your thoughts in the comments below, and let's keep the conversation going.